All right, we got the Fed rate decision. No surprises in the Fed rate decision. We expected there to be no rate cut, and there was no rate cut, believe it or not. Well, I mean, that's exactly what we said. The irony is that now there's the Fed seems to be pretty divided. The Fed seems to be pretty divided. They say the most divided the Fed has been in the last 32 years, to the extent that members of the Fed, actually, the two members of the Fed that may actually publish what they call a dissent. It's basically like a thing saying, look, we're part of this committee, but we don't believe that, we think that rates should have been cut. That's coming from 𝗪𝗫𝗪. He says, this week the Fed's meeting could feature two dissents from governors, of which hasn't happened in more than 30 years. And this is around the rate cuts. I'm also watching this thing live. I'm getting some reports here. I'm going to keep bringing them up as we get live here. I'm going to keep bringing them up. Here's one that's coming. It says, Fed removes the language around saying that uncertainty has diminished. They obviously know that there is uncertainty, that the uncertainty has basically now gone completely, and there's like that basically isn't a signal anymore. So there's lots happening, lots to talk about. The markets actually aren't really moving as much. I mean, I guess the markets expected exactly this, and everything's going to happen on the press conference with Powell, which we're going to be covering for you guys live here on our new channel, which is 100X Club. This is effectively where Fefe lives. Fefe, what do you do on this channel, bro? I heard there's like lots of shit going down on this channel.
I have serious echo, so I don't know if you guys hear me, but I have
Can
serious
we kill the
echo
echo for Fefe? Hold on. How does kill the echo for you?
Oh, thank you. Hey, what's happening? I didn't hear anything. I was hearing you 5 times. Did you hear the same, Dylan?
No,
it's the same for you.
It's all good for me.
It's all on your side, sir. It's on your side, sir.
No, it's good. It's good.
It's
yeah,
all
so we do everything, Ren. We do education. We do charts. I do drop 2 videos a day. So I drop a market update, very short, and then I drop an educational video on anything that's happening that's relevant to the market later on.
Amazing. So guys, this is our new channel here on the Banter Fam. If you're new to the channel, subscribe now and put the notifications on, because this is where we're going to be coming to you when we do a lot of stuff with Fefe and with Dylan and stuff like that. It's called the 100X Club. Okay, go. Subscribe to the channel. Also, if you're here, like the content, because that tells people that we're here and we're live and we're bringing you guys crypto love and crypto wisdom. And our objective is to make this the biggest stream watching the FOMC today, right? And again, I said, there's quite a lot to talk about. Even though the rates are unchanged, the Fed is absolutely divided for the first time in, they say, 30 years, believe it or not. The first time in 30 years. Let's actually open this article. I must say, this is all coming through live, so you're seeing it when we are seeing it. Fed, the most divided in 32 years, refuses to cut rates again. Since the last FOMC, stocks have soared and gold and crude oil have been sold, while bonds and the dollar have trod water. That's basically the chart. Let me make it a bit smaller so we can actually all see it. There we go. Okay, interestingly, the voyage has been eventful. The market's expectations of rate cuts is exactly where it was at the last FOMC meeting. So they're not expecting rate cuts. In fact, I think they're still expecting 1 rate cut this year, believe it or not. And I think there's 2 more or 3 more FOMC meetings. Heading into today's FOMC decision, expectations were unequivocally for no rate cuts, with September signaled as better than a coin toss for the next rate cut. So let's just quickly see what they're talking about.
It's 63%. 63%
That's good,
for September, yeah.
Okay, so now the rate cuts, I mean, like basically Powell has relented. They're talking about 63% rate cut, and then they're talking about 1 more rate cut in December. So on the 10th of December, there's another Fed meeting. They're talking about 44% of 1 more rate cut. Okay,
there's 49 in October, Ren. 49, so almost 50% for October. And
yeah, it says here 50% for no rate cut. She's saying
no, is it we're looking at the same thing? Can you share my screen? Oh yeah. If you go back to the current, it says here on October 50% for between 400 and 425.
That's no rate cut, because the first rate cut would come in September. That would bring us to 400 to 4. Yeah. Okay.
Yes.
Okay. So look, I'm getting all my data from here, so you guys can see where I'm getting all my data from. This is where our newsroom lives. You can obviously all have access to our newsroom. Just click on this button over here. This is where I'm getting all the information, right? President Trump's Bo-Heinz and digital asset report is coming out soon. That came out like 1 minute ago. Trump says Nancy Pelosi should be investigated for insider trading. That also came out today. Fed removes language saying uncertainty has diminished. Most divided the Fed has been. You see, all the data that I'm giving you basically comes from the Banter newsroom, which lives in Banter Bubbles. So you can see it here on the Banter Bubbles app. We can also see how the bubbles are moving. I'm going to go into live bubbles because that will show us what's going on here. QT, the committee, this is coming from Ben Carr, and it says, QT, the committee will continue reducing its holdings of treasury securities and the agency debt. So they will keep reducing their holdings. Damn, that means that this QT is going to continue, man. That means that QT is continuing. That's quite bearish. QT continuing is actually quite bearish. 𝗙𝗍𝗪 data just wrote a breakdown. Fed leaves rate unchanged for the fifth straight meeting. Fed voted 9-2 to keep rates unchanged. Indicators suggest growth of economic moderated. Inflation in the US remains somewhat elevated. I actually read this today. I read this again from 𝗕𝗓𝗪𝗏's account. It says, economists who translate CPI and PPI into PCE expect monthly core inflation firmed in June. BA reports this Tuesday. Core PCE plus 0.29, which would push the year-to-year to over 2.8%. So there is still an inflation problem in the US. Like, say what you want, there is still an inflation problem in the United States. What else is there? FOMC remains unchanged. Here's the language for release. Although swings in net exports continue to affect the data, that changed from have affected the data. Recent indicators suggest the growth of economic activity in the first half of the year, and they removed has continued to expand at a solid pace. And they replaced that with moderate growth. The unemployment rate remains low and the labor market condition remains solid. Inflation remains somewhat elevated. The committee seeks to achieve maximum employment and inflation at a rate of 2% over the longer run. So basically, this is what he's going to be talking about today. He says voting against the actions were Michelle Bowman and Christopher J. Waller. This Christopher J. Waller, by the way, if you go to Polymarkets, so if you look at Polymarkets and you actually go to, let's actually go to Polymarket, and you look at who's the next Fed chair. I don't know if let's just see if we can get who will replace. Let's see who will replace Powell as Fed. Who will replace Powell? Let's see if there is a market like that. Hold on, there is one here. I've got to just try and find it. Economy, it's probably here. Fed decision in July. Jerome cuts rates. I want to see who the logical researchers. If you could send me the link to who's replacing Powell, that would be amazing. Let's just get the live stream. We've got the live stream over here. Dill, what charts are you watching, bro?
Dude, it's all about altcoins for me today. We've had a 2-day smash, basically. These alts have just bled out so hard.
Let's just show us your screen. Share your screen, and let's have a look.
Came down to some very big levels today here. Let me just get my screen out. But we got some bounces we were looking for. Let me just figure this out here.
Okay,
but it has to be 50x leverage, or it doesn't matter. It has to be 50x leverage or 100x leverage.
I do some degen shit though. I'm not gonna lie. But I mean, this was I caught a banger today. We had these alts dropped into some big levels. Look at this Brett, bro. Look at this Brett, straight into the pocket. I mean, for a monster bounce here. So it was a nice big level for me. It was like it was ball hearing though. We were very touch and go at one point today. Run. I don't know if you were watching the alts market, but Bitcoin was flat, bro. And we were
no. Look, I'm not trading the 3-minute charts like you guys are. But
it's not that bad. I mean, I've been trading the 1 hours today, but look what we're getting on these alts. Just so you guys can see, we're getting so much 2-hour bullish divergence prints on so many of these altcoins. So it's almost like they sold off for 2 or 3 days, and now they're just desperate for something dovish from Powell today. So hopefully he comes to the party. Short-term bounce. I'm still feeling bearish though overall. I'd say the daily still look a little bit tired for me. I'd say dominance looks way too bullish for me. At the moment, looks way too bouncy. Fefe, I don't know your thoughts on dominance.
No, yeah, I agree. I think it's if nothing else, especially with the Fed, I think what's going to be super interesting today is that very soon, actually, I think we might even be live when the White House report comes out from the crypto group that they've been working on the past 100 days.
Yeah, what time is that? What time is that?
It should have been now, but I think they are postponing it because of the FOMC. So I think they're gonna drop it off to the FOMC to try to keep the market up, bro. That's what I'm thinking. But they're gonna drop it. I'm monitoring Bo Hines' X. So it's gonna drop there. I think that could, but I honestly, like, as we've been discussing before, we went short 3 days ago, and I haven't really taken any long positions since then. I have mines open. I'm gonna add back to them, but for now, I think anything that comes is just gonna be a rebound maybe a 4 or 5% bump on, you know, and then that's it. We flush filler.
I'm not looking for new highs here on these alts. These dailies are still way too bearish. Like, I think there's a nice example here. I think it was AVAX. Let me actually show you. It's a good example for the whole altcoin market right now. And if you take a look at this, these things, they typically bounce on major zones. But this oscillator that I use for all of my stuff is still pretty bearish on the daily. And the daily takes like 30 days or whatever to reset. And we're only kind of halfway there on AVAX. So it's telling me there's potentially a long journey here down.
I agree.
It could be quite painful. So, you know, like today, trying to play some bounces here short term with some good areas. But like I'm feeling overall, unless there's like a proper catalyst now, I don't know what takes us to new highs on these alts until we get, you know, rate cuts and things like that. I don't know, Ran. What's the driver, you know?
There can't be rate cuts until September. I guess in September we might get rate cuts. I guess in September we might get one rate cut. It's probably going to be 25 basis points. It's going to piss Trump off a lot. Yeah, I mean that's pretty much like that's what's going to happen, unfortunately. Let's just.
But it also depends a lot, Rand. Don't you think it depends a lot on how this whole August 1st deadline goes? And the Bestline just said that they're going to have China maybe more tariffs for them to agree, and the 90-day pause is not even applicable. Maybe. Like, don't you think that September will depend on how this whole thing plays out? I
think this tariff thing is a load of shit. I think Trump knows that he can't reduce tariffs. He can't increase tariffs and start playing that game, because that'll mean uncertainty. If he gets uncertainty, that'll mean that the Fed won't cut at all. There's no chance that that's going to happen. No chance that that's going to happen. Anyway, before we carry on, so just guys, remember, if you're not already subscribed to this channel, this specific channel, you need to be subscribed to this specific channel, because this is where the FOMCs are going to be happening, right? All the rest of the stuff, everything is going to be happening on this channel. So if you haven't subscribed, subscribe. I want to see the numbers going up. Also, remember, these FOMCs are actually sponsored. They're brought to you by NordVPN. Fefe, tell them why it's so important to have a VPN in crypto, because I've tried, bro. I've tried to tell them.
We literally did the course. We literally did the school cohort today. And on the school cohort, I said, you know, it's really, I mean, a lot of people, I got a lot of heat. Like, yeah, it's a partner on the channel and this and that. But, bruh, VPN, especially NordVPN, the reason I've been using them for a long time is because of the threat protection. So many people just simply get scammed. They wander onto some shitty website. It's just a no-brainer. If you have, you know, you're investing, even if you're investing $200 and you don't have a VPN in crypto, I think you're doing it completely wrong. It's not about how much money you can make in crypto, how much money you can keep. And I think we all learned that the hard way.
Guys, remember, if you want a VPN, there's a link below. You pay $3 a month to protect your assets. $3 a month. If you're in crypto, you're not going to pay $3 a month to mask your IP address. You've lost your mind. And I think what you should also add is, if you're in crypto, add the incognito, which will cost you another, I don't know, you get 60% off if you sign up. The reason why you need to add this incognito is because it removes you off all those black market databases. It gets you out of all those things. And that, you need that. You need to get off those things. You need to get those irritating spam mails and whatever else. You need to get them off. Anyway, what else? Let's see. We could just look at the bubbles. I think the bubbles will give us a very good idea of what's actually going on. These bubbles are live, so they're popping up quite quickly. I see the Chinese conflux. That's starting to move. Pump 26.2 cents.
While we waiting, talk to me about Pump, guys. What's the story? Is it done now?
Oh my God, don't.
I'm buying.
Are you done? Do you have are you on leverage, Ren?
Yeah, of course.
Sure. Well, how much are you down?
I'm not. I bought at 28, so 27.6 or something. So I'm like 1 cent down. Yeah. But I'm buying it because if you got $2 billion and you can't create $2 billion of token holder value, then I mean, come on, you got to be like, if I gave you $2 billion and I said use the $2 billion to create value for your token holders, and you couldn't create more than $2 billion, then
look, I have to be long as well. I have to be long. I am long. I think this whole bonk thing, everybody's blowing this up. But honestly, like, if you look at bonk, yes, maybe the past month and a half it outperformed, but these guys have been basically the main extractors of the space. But also in terms of extractors, in terms of understanding what the people, what the people want. You know what I mean? So like, they know what they're doing. They're sitting on $2 billion in cash. There's no way this doesn't bounce hard. And you see, there was speculation that they spent 100% on their fees to buy back tokens. The token pumped 35% in a minute. So like, it takes one single announcement, and this thing is going back.
Copper, I've got something here which is quite interesting. These are coming through on the newsroom right now. So it says Copper prices collapse over 11%. Copper prices collapse as Trump tariffs exclude refined metals. Okay. So, okay, cool. So that, I mean, okay, that's
so he brought the copper tariffs, copper pumped, and now they're excluding it. So he's
because if copper has tariffs, copper becomes more expensive, right?
Yeah. But I mean, this just the other day, copper was ripping because he was bringing a 50% tariff or something onto it. So has he changed his mind? What? Fuck?
It's the same playbook.
Dude, unreal.
I'm actually super excited to see. This report. I'm dropping a video.
I think the report's going to be an absolute nothing burger. Don't expect anything from that report.
If it is, then we're going down. But I think it shouldn't. Like, imagine that they had 180 days. These guys, like 𝗏𝗪𝗺 as well, have been very vocal about the fact that they want to find a budget-neutral way to acquire Bitcoin. They have to come up with something. Whether it's DeFi, whether it's Bitcoin, the reserve, and they have to do something here.
I don't know if
and I'm not expecting like.
Okay,
they have to.
So the report is out. The report's out. Just so you can see, the report is out. Here's your report. What do you think?
It on 𝗏𝗪𝗺.
What do you think?
What is that?
Okay, that's the White House report, sir. Just came out.
So can you say, was it in the newsroom?
You better get reading,
bro. Sure, bro. Researchers drop it in the newsroom for Fefe. Digital lab, blah blah blah, protecting the thing. Members.
Feed it to ChatGPT. Feed the PDF to ChatGPT. Right? Where are we reading?
Okay, hold on a second. Okay, ChatGPT.
Just download ChatGPT. That's it.
Bro, I don't need to download ChatGPT. Of course I've got ChatGPT.
He is ChatGPT.
I didn't even know that it had a browse feature, bro. I use it. You know, it's so good on Mac. I got some. Like you can literally just go option space and then it brings it up in front of you. You will need to download maybe. I don't know.
Let's see.
Okay, random boomer here. Okay. Who uses ChatGPT in a browser, bro?
Bro, why not?
Do you even use? Okay, so let's see. Cousin.
Stablecoin regulation, clear rules on the issuance and threshold of stablecoin, market structure oversight, innovation. I told you, it's a nothing burger, bro. It's a nothing burger. CFTC to supervise non-security, SEC to oversee securities, stockpile, evaluating, creating strategic Bitcoin reserve from seized assets, formal plans pending treasury release, CBDC prohibition, reaffirms. It's everything we know, bro. I told you, everything
I'm gonna add to my short.
Everything we know. I warned you before this is gonna come out. Anyway, Powell's gonna be on in 2 minutes. Let's get our screens ready.
3,000 people watching, Ren. 3,000 people.
That's not enough, Fefe. Not enough. We usually need to get 10,000, like normal. But yeah, this is a new
600
channel.
likes. We should just pop this up.
He must just pump our bags for like 2 hours or something. Just something fun. Think we can make a plan here?
Do you think he's angry? Like I genuinely, for the first time, I felt sorry for the guy when Trump went down.
I feel really sorry for Powell. I really feel.
Yeah,
sorry
have you seen 𝗏𝗪𝗺's post? Is like, you bring down inflation from 9% to 2%, you keep unemployment at 4%, and then people still wish that you're fired. I mean,
dude, I was saying, this is someone's granddad. You know what I mean? And he's like getting abused like that. It's so shit. It's like actually.
Yeah, I felt bad.
Yeah, and you know, and Trump was unfair. Like, the guy brings in a different building.
Dude, that was class. He's like, no, it's got up 5 billion. And he's like, it's a whole new building, bro.
But the way he looked, I even made it into sticker. The way he looked, like, no, that's no
good, bro.
No. And then he was waiting for a long time.
Here comes Powell.
Let's go.
Okay, bro, let's take some long.
I love the elevator music, bro. Dylan is pushing it.
Let's take some time.
Let's see here. Let's get we got the Bitcoin 3-minute chart over here, which is like, this is the key chart for us. Not that I think anything's gonna come on this, but let's see. Why is it?
Do you think he's angry? That's my question. Do you think he's
I think he feels betrayed, and I think he feels demotivated. The guy's done I think he's done a fucking fantastic job.
Yeah, I agree.
And
I agree.
Let's get the NASDAQ up here. I think that's probably a good one to get up here. Oh, here he is.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment
You
and
should know
stable
this off by
prices
heart by now, bro.
for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a 1.2% pace in the first half of this year, down from 2.5% last year. Although the increase in the second quarter was stronger at 3%, focusing on the first half of the year helps smooth through the volatility in the quarterly figures related to the unusual swings in net exports. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles picked up from last year's pace. Activity in the housing sector remains weak. In the labor market, conditions have remained solid. Payroll job gains averaged 150,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and has stayed in a narrow range over the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in June, and that, excluding the volatile food and energy categories, core PCE prices rose 2.7%. These readings are little changed from the beginning of the year, although the underlying composition of price changes has shifted. Services inflation has continued to ease, while increased tariffs are pushing up prices in some categories of goods. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market-based and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%, and to continue reducing the size of our balance sheet. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to show through more clearly to prices of some goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation could be short-lived, reflecting a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. For the time being, we're well positioned to learn more about the likely course of the economy and the evolving balance of risks before adjusting our policy stance. We see our current policy stance as appropriate to guard against inflation risks. We're also attentive to risks on the employment side of our mandate. In coming months, we will receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on potential revisions to our statement on longer-run goals and monetary policy strategy, and are on track to wrap up any modifications by late summer. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
The interesting part happens.
Thanks, Chair Powell. There's a lot of lean in the markets, and not to mention out of the administration for a rate cut now in September. Is that expectation unrealistic at this point?
So, as you know, today we decided to leave our policy rate where it's been, where I would characterize as modestly restrictive. Inflation is running a bit above 2%, as I mentioned, even excluding tariff effects. The labor market's solid, historically low unemployment. Financial conditions are accommodative, and the economy is not performing as though restrictive policy were holding it back inappropriately. So it seems to me and to almost the whole committee that the economy is not performing as though restrictive policy is holding it back inappropriately, and modestly restrictive policy seems appropriate. All that said, there's also downside risk to the labor market. In coming months, we'll receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate.
So just to follow up, by coming months, does that include the possibility you'll be getting essentially 2 rounds of jobs and inflation data between now and the September meeting? Is that potentially adequate to make a decision to lower rates at that point?
So you're right. We do have, this is an intermeeting period when we'll get 2 full rounds of employment and inflation data before the time of the September meeting. We have made no decisions about September. We don't do that in advance. We'll be taking that information into consideration and all the other information we get as we make our decision at the September meeting.
Steve.
Thank you, Mr. Chairman. You took out the word or the notion that uncertainty has diminished from this statement. Does that mean uncertainty has increased? And I'm just wondering, the administration has struck several deals with large trading partners where it seems like we now know what the rate is going to be. Does knowing that rate add to your certainty to change policy, or do you need to wait to see the economic effects?
So essentially, the statement in our statement about uncertainty reflects what's gone on since the last meeting. So at the time of the last meeting, uncertainty had moved down a little bit, but it was more or less even this time. So we took out, had diminished because it didn't diminish further. So there's not really much in that. And then your second question is, say again?
There have been several deals that have been struck, and now we seem to have an idea what the tariff rates are going to be with some of our large trading partners. Does that not add to the kind of certainty you might need, or is it you're waiting for the economic effects to show themselves?
No, I think we're still, you're right, it's been a very dynamic time for these trade negotiations, and lots and lots of events in the intermeeting period, but we're still a ways away from seeing where things settle down. We are clearly getting more and more information, and I think at this point, people's estimates, our estimates, outside estimates of the likely, effective level of tariffs is not moving around that much at this point. But at the same time, there are many uncertainties left to resolve. So yes, we are learning more and more. It doesn't feel like we're very close to the end of that process, and that's not for us to judge. But it feels like there's much more to come, as well, looking ahead.
Neil.
Hi, Mr. Chairman. 𝗫𝗎 with Axios. This morning we got a GDP report in which final domestic private purchases decelerated, slowest pace since 22. There was a weakness in the interest-sensitive sectors and residential investment, commercial structures. Are those not signs that monetary policy is a little too restrictive right now, given current economic conditions?
So the GDP and PDFP numbers came in pretty much right where we expected them to come in. You got to look at the whole picture. So certainly, as I mentioned in my opening remarks, economic activity data, GDP, private domestic final purchases, which we think is a narrower but better signal for future.
He must be
for where
counting down
economy
the
is going,
days, bro.
Has
till
come
the end
down
of
to
his
a little
tenure.
better than 1%, 1.2%, I think, in the case of GDP for the first half, whereas it was 2.5% last year. So that has certainly come down. But if you look at the labor market, what you see is, by many, many statistics, the labor market is kind of still in balance. It's things like quits, job openings, and let alone the unemployment rate. They're all by many measures, very similar to where they were a year ago. So you do not see weakening in the labor market. You do see a slowing in job creation, but also a slowing in the supply of workers. So you've got a labor market that's in balance, albeit partially because both demand and supply for workers is coming down at the same pace, and that's why the unemployment rate has remained roughly stable, which is why I said we do see downside risk in the labor market. I mean, our two mandate variables, right, are inflation and maximum employment, stable prices and maximum employment, not so much growth. So the labor market looks solid. Inflation is above target, and even if you look through the tariff effects, we think it's still a bit above target, and that's why our stance is where it is. But as I mentioned, downside risks to the labor market are certainly apparent.
We see, on labor, given the fluid labor supply situation, is there a number for this jobs report we get on Friday that would look to you like equilibrium job growth?
The main number you have to look at now is the unemployment rate, because it's
true the liquidity sweep.
Demand for workers in the form of, let's call it, just say payroll jobs, that number has come down, but so has the break-even number, kind of in tandem. So, as long as that puts the labor market in balance, the fact that it's getting into balance due to declines in both supply and demand, though, I think it is suggestive of downside risk. So we of course, will be watching that carefully.
Thank you. Colby Smith with the New York Times. Two of your colleagues called for a quarter-point cut today, and I'm wondering what aspects of their argument were most compelling to you, and how you're weighing their views against those on the committee who, as of the June forecast, were in the camp of the Fed holding interest rates steady for the remainder of the year. And just in terms of the June SEP in particular, is that still the best representation of where the core of the committee is?
So on the dissents, what you want from everybody, and also from a dissenter, is a clear explanation of what your thinking is and what are the arguments you're making, and we had that today. So I think basically this was quite a good meeting all around the table, where people were thought carefully about this and put their positions out there. As I mentioned, the majority of the committee was of the view that inflation's a bit above target, maximum employment is at target. That calls for modestly restrictive, in my way of thinking, modestly restrictive stance of policy for now. But we had two dissenters who, I think, you want that clear thinking and expression of your thinking, and we certainly had that today, I think, all around the table. In terms of, you asked about the June SEP, I wouldn't. You're right. That's what it says, and that may well. I couldn't point to it 6 weeks later as expressing people's thought. You really can't do that. We don't run an SEP, and I don't like to substitute in my own estimate of what the SEP might be. We don't have one. So I'll just say that we haven't made any decisions about September. We'll be monitoring all the incoming data and asking ourselves whether the federal funds rate is in the right place.
And just on the point about policy being only modestly restrictive, does that mean that there's actually not much scope to reduce rates once the conditions for a cut are met, barring a significant weakening of the labor market?
So let me say, my own estimate is modestly restrictive. And
what the market maybe didn't like it. They didn't maybe like something in the report.
For our economy, and so others may say it's more restrictive or less restrictive even.
I think the expectations were higher. That's all it is.
I told you this money's
at some point, when we return to moving toward a more neutral stance, we'll be making that judgment as we go. I don't think we have a preset course. It's not so mechanical as saying, we've derived with great confidence the neutral rate, and that is our destination, because really we understand that no one actually knows what the neutral rate is. We know it by its works, and that will be the way the economy reacts over time to slightly looser policy.
𗗙𝗪𝗪, The Wall Street Journal. Chair Powell, my question is about what have you learned over the last few months about the inflation generating and price pass-through process? And just to drill down, the June CPI report showed evidence of tariff-induced goods inflation. Now, the tariff landscape is only starting to be settled with some of these more recent deals. Given the lags between when tariffs are announced and when they show up in goods prices, is 2 months a long enough horizon to evaluate the impact and be confident that tariffs aren't impacting the broader inflation process?
I think you have to think of this as still quite early days. And so I think what we're seeing now is substantial amounts of tariff revenue being collected on the order of $30 billion a month, which is, substantially higher than before. And the evidence seems to be mostly not paid only to a small extent through exporters lowering their price, and companies or retailers, sort of people who are upstream, institutions that are upstream from the consumer, are paying most of this for now. It's starting to show up in consumer prices, as you know, in the June report. We expect to see more of that. And we know from surveys that companies feel that they have every intention of putting this through to the consumer, but the truth is they may not be able to in many cases. So I think we're just going to have to watch and learn empirically how much of this and over what period of time. I think we've learned that the process will probably be slower than,
my bots are performing like
than
crazy,
expected at the beginning, but we never expected it to be fast. We think we have a long way to go to really understand exactly how it will be. So that's how we're thinking of it right now.
So if I could follow up, is the reticence to look through core goods inflation being driven by the judgment that during the pandemic expectations proved more adaptive than anyone at the Fed expected? Is it being driven by uncertainty over how restrictive policy is?
You could argue we are a bit looking through goods inflation by not raising rates. We haven't reacted to new inflation, but I mean, I wouldn't insist upon that. But I don't think, I think the base case, as I said, a reasonable
Market
base
doesn't
case
like this,
is that these are
117,100.
one-time price effects.
But it's
Of
going to
course,
bounce
in
like a
the end,
motherfucker very
There
soon.
will not be. This will not turn out to be inflation, because we'll make sure.
I'm not
that
sure it's gonna
not. We will,
bounce.
through our tools, make sure that this does
Dylan,
not
what's the chart
move
telling you,
from
bro?
being a one-time
The
price
big level
increase
of
to
116,600
serious
I've been
inflation.
tracking today.
We want to do
There's
that
a little bit of
efficiently, though,
liquidity down
efficiently,
to
and
like
that means we
115.
want to do it.
So I think it's reasonable.
If you
down
move
there.
too soon,
And then there's a
you
nice
wind up
upside, 120,
maybe
121.
not getting inflation all the way fixed, and you have to come back. That's inefficient. If you move too late, you might do unnecessary damage to the labor market. So there won't be, in the end,
The same stuff
a big
over and over
inflationary
again.
problem. What we're
Same
trying to
thing
do
he's been
is
saying.
accomplish
The
that. in a
FOMCs
way
haven't
that
been
is
very
efficient.
exciting, but I think now
in the
they
end,
will get.
There should be no doubt that we will do what we need to do to keep inflation under control. Ideally, we do it efficiently.
Traders bet on more than one rate cut this cycle. We know that, yeah.
Michael McKee from Bloomberg Television and Radio. The one big bill, leaving aside the adjectives, do you expect it to add stimulus to the economy in 2026? And would that be an argument for remaining on hold or cutting back on the number of rate cuts you would expect for next year?
So, of course, let me just ritual disclaimer that we don't express any judgments or anything like that on fiscal legislation or other legislation for that matter. But I would say when you think that the biggest part of the bill was making permanent
1169
existing law on taxes, I don't think we see it as particularly stimulative. There should be some stimulative effect, but it shouldn't be significant over the next couple of years.
And to follow up, I don't want to put this in terms of you and the president, so let me ask it this way. Do you have concerns about the cost to the government of keeping rates elevated for longer in terms of interest rate charges?
Good question. He framed it pretty well.
We have a mandate, and that's maximum employment and price stability. And it is, it's not something we do to consider the cost to the government of our rate changes. We have to be able to look at the goal variables Congress has given us, use the tools they've given us to achieve those goals, and that's what we do. we don't consider the fiscal needs of the federal government. No advanced economy central bank does that. And it wouldn't be good for, if we did do that, it would be good neither for our credibility nor for the credibility of U.S. fiscal policy. So it's just not something we take into consideration.
Victoria. Hi, 𝗕𝗏𝗄𝗏 with Politico. When it comes to the renovations of the Federal Reserve's headquarters that the administration has been looking into, do you see their interest in that issue as being directly tied to the president's push to get you to lower interest rates?
Not
Clever
for me
question.
to say. I will say we had a nice visit with the president. It was an honor to host him. It's not something that happens very often at the Federal Reserve to have the president come over, let alone to visit a building. But it was
3 times in history.
Well
Are there
done.
any aspects of the project that they've raised that you see as making you reconsider any aspects of the project?
So, this project was hatched and conceived almost a decade ago now, and we went through the very long process of clearing it through historic preservation at the National Capital Planning Commission, and a lot of back and forth there. It was very constructive. We started out to do the work, and we're very well along on that work, and I was quite pleased to have the president say multiple times that what he really wanted to see was us getting this construction completed as soon as possible. That is our focus, and that's what we're going to do.
4D chess. 4D chess.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. What message do you take from the fact that inflation hit 2.1% last September and has bounced higher since? Why do you think financial conditions are restrictive and a neutral rate's below 4% when inflation has stopped falling for almost a year?
So inflation, when you talk about these 12-month inflation measures, you're always battling residual seasonality. So we'll have, for example, 2 months of high inflation sometimes early in the year, and then inflation turns lower, and a lot of that may just be an artifact. So that's why we look at the 12-month numbers. I think inflation is most of the way back to 2%. There are things like the catch-up inflation. So, for example, all the insurance costs that they're only now going through inflation, but they actually reflect inflationary pressures from 2-3 years ago. So that's got to go through. In addition, now we have 3 or 4 tenths of inflation in core inflation from tariffs. So, and we can't really separate that out. We're not going to have a separate kind of inflation that isn't the tariffs. We're always going to be dealing with all of inflation. But the composition, as I mentioned, has really changed. And if you go back to the last couple of years, it was all about services inflation, which was being very sticky. Now services inflation is coming down nicely. Goods inflation was well behaved before, and now goods inflation is going up. So the story has really changed. That's partially because of tariffs. It's also partially because we had restrictive policy in place, and we've seen that the result of that gradually work its way through the services economy.
Okay, the other thing I wanted to ask is, are you comfortable that BLS can continue performing their mission effectively if they take an 8% reduction in headcount and authorized spending as the administration has proposed?
I'm not going to comment on the administration's proposal. I do think, as I've said, I think that we're getting the data that we need to do our jobs, and I think it's really important that good data helps not just the Fed, it helps the government, but it also helps the private sector. People in the economy, they use this data a lot too, so it's quite important for our economy and certainly for the Fed's work and other government agencies' work that we continue to get better at data. That's what we've been doing for 100 years. We've been getting better and better and better. It's very hard to accurately capture in real time the output of a $20+ trillion economy. And the United States has been a leader in that for 100 years, and we really need to continue that, in my view.
I'm going to call a bottom here, bro. Like 116,500, I'm calling a bottom.
Thank you, Mr. Chairman.
I
Edward
take
Morris
the other
from
side.
Fox Business. How concerned are you with the data that we're showing coming in, showing no significant upward trend in inflation over the past 6 months, that the wait-and-see approach for inflation is actually giving companies cover to raise prices?
How concerned am I that say that again?
The wait-and-see approach is giving...
The wait-and-see approach, what do you mean by that?
For cutting rates. You're waiting to see if the tariffs will affect inflation. So it's a wait and see approach.
Well, so that, that's where policy is restrictive. When we start cutting, it'll go toward neutral.
Okay. This delay, though, where you're saying there's a one-time price increase for tariffs, which possibly could lead into bigger inflation or more inflation. Is that giving companies cover, though, to raise prices?
Well, what may be giving, it's not our policy stance, what may be giving some companies will certainly be taking advantage of the fact of the tariffs and all the discussion of how they're going to, companies will raise prices when and as they can. And you saw it famously in the first administration of President Trump during those tariffs. Washing machines were tariffed, but dryers weren't.
Traders no longer fully priced in the Fed cut in October.
Just like
that
washing machines. So companies will often just they'll cross the street in a
it's
group.
September, it's not October. I mean. It's the one they're talking about is September.
We don't see a lot of that. I mean, what we see now is basically the very beginnings of whatever the effects turn out to be on goods inflation. And I'll say again, they may be less than people estimate or more than people estimate. They're not going to be zero.
The 4-hour candle close in 3 minutes.
Some of this.
Massive.
Businesses will pay some of
Massive
this.
red
Retailers
candle.
will pay some of this. But
It's actually the hour.
we're just going to have to see it through.
I don't know what it's responding to, because it's not responding to
additional tariffs have
news.
been in place since February.
I think that was the
and
expectation was too high. Structurally broken, we should pull back.
So how do you justify to somebody who's looking for a house, who's facing a 7% mortgage and maybe can't afford those rates? How do you justify that?
Well, so the housing is a special case, right?
What were you saying, Dill?
I think we're going to bounce here.
I also think so. I think this is what
think
I'm calling a bottom. Yeah, 116 wherever it is. I'm calling a pico bottom.
It's got to be closer.
Fefe, what are you thinking, bro?
Sub 114.
Sub 114. Did you not take your antidepressants today, bro?
Dirty,
Didn't the doctor
Maybe
say
we bounce here a little bit,
Didn't
but
the doctor
ultimately
say
before,
take one? Didn't the doctor say take one a day? He didn't say miss days, bro.
Maybe I took 2. Maybe we see a temporary bounce here, but that's it. Like it's not good.
Housing.
Look at the total market cap. There was no new highs.
And
Not
maximum employment, and that's what we can contribute to housing. There are lots of other jobs to do for the private sector and Congress, but that's what we're trying to get to. I mean, we've made a lot of progress toward that. We have a very good.
Bro, I watched one of your shows today on your 100x Club. I watched the one today. You did a show about the in-kind redemptions, right?
Yes.
Fuck, our show was good, bro. It just summarized the whole thing very, very, very well. Like I must say, like there were certain aspects I didn't even understand, and then I watched the show, and then it was like, wow, okay, now I really get it.
I'm happy. That's what we aim to do, I want to drop a daily update, and we're dropping like an explanation. For example, tomorrow morning, first thing, there will be an update on the whole crypto report, a summary on 5 minutes, short form. You can watch it, understand it. Yeah.
Okay, hold on, wait. Let's just see what Powell's saying.
Those things, right? But if you saw that the risks to the two goals were moving into balance, if they were fully in balance, that would imply that you should move toward a more neutral stance of policy. This is the special situation we're in, which is we have two-sided risk to both of our goals. When we paused, inflation was above target and the labor market was pretty good. So that was a time when policy was restrictive when we paused. And to be restrictive is to be supporting a return to our inflation target, right? So as the two targets get back into balance, you would think you'd move in a way closer to neutral, and that the next steps that we take are likely to be in that direction. What will it take? It'll be the totality of the evidence. As I mentioned, there's quite a lot of data coming in, which before the next meeting, will it be dispositive of that? It's really hard to say. We don't make those decisions right now, so we'll have to see.
Well, I guess just in terms of inflation, though, for example, like some people would point to if it remains only in goods and it doesn't bleed over to services, then maybe that's evidence that the tariff effect is going to be a temporary one-time thing. Is that kind of thing affect your thinking, or do you just need to see the number come down closer to 2?
We'll look at everything. It's.
I think there's not a lot happening here, and I actually want to come. Let's go to this, guys. Researchers, is the White House stream being streamed? Eleanor Terrett seems to be there. This is where the report was actually published. Said Here in the Indian tree room of the Eisenhower Executive Building for the White House crypto reportory. So the room is quickly filling up. That was when the room was filling up. Then the report came out. Beston says the report includes 100 regulatory and legislative actions on broad range issues, including counterfeiting illicit finance, ensuring fairness and predictability in crypto taxation, reinforcing dollar dominance through stablecoins, and modernizing the bank regulations for digital assets. To close, he said, so start your companies here, launch your protocols here, and hire your workers here. You'll be glad you did it. Attorney General Pam Bondi now says it's up to DOJ is considering several reforms that will cultivate a robust financial technology landscape. For example, we're elevating victims' compensation regulations and ways to address victim compensation by improving asset forfeiture effects. In other words, we're going to give money back to victims and not the Department of Justice like the Biden administration. That's quite big. That's like if you're a victim of a hack, then they give you the money when they seize it from the criminals. They don't give it to like the department, which is exactly what they've done. That's quite big. Researchers, is this thing live anyway? Is anybody streaming it? Let's see if we can actually get it in the comments. If you guys say that, Charmander.
But I'm not sure that. What I don't know now is that do you know the difference between the Clarity Act and this one? This is just a report they are making, and the Clarity Act will be formed based off of this, or like?
Well, this is a report. It's not an act. An act is actually an act. It's a law. You put it into law. There's not law. This is
so they're gonna use this report to finalize the clarity.
Correct.
Would be cool to know if there's any budget neutral proposals other than.
Nothing. There's nothing to buy strategic crypto. They warned us earlier.
We do, of course. I mean, as you know, during the pandemic, we looked at a whole lot of new kinds of data. People are looking at big data sets that you can get from all sorts of places, and we do all of that. But at the same, we really need the government data. Really is the gold standard in data, and we need it to be, to be good and be able to rely on it. And
I'm going to keep updating this tweet.
We're not going to be able to substitute for that, but if we
Bitcoin
have to make do with what we
116,320.
have, but I certainly hope that we get what we need.
Jay O'Brien.
Hi, Mr. Chairman. Jay O'Brien, ABC News. President Trump has obviously invoked your name a lot. He has personally pressured you. Are you concerned the way that conduct might impact the Fed's independence going forward?
I'll just say that, I think that having an independent central bank has been an institutional arrangement that has served the public well. And as long as it serves the public well, it should continue and be respected. If it didn't serve the public well, then it wouldn't be something that we should just automatically defend. But what it gives us and other central banks, what it gives you is the ability to make these very challenging decisions that in ways that are focused on the data and the evolving outlook, the balance of risks, and all the things we talk about, and not political factors. And so governments all over the advanced economy world have chosen to put a little bit of distance between direct political control of those decisions and the decision makers. So if you
get liquidated, bro?
If you were not to have that, there would be a great temptation, of course, to
But I can't hear you. What are you saying?
Interest rates to affect elections, for example. And that's something that we don't want to do. So I think that's pretty widely understood.
What is this?
It's my trading view alarm, bro, for Pengu. There was an alarm on for Pengu.
Is this your alarm?
Yeah, it used to be a rooster, bro. It used to blow my ears open, so I couldn't.
Oh my god! Do you wake up at night? Do you wake up at night as well?
Oh, no. But now it's like every time I hit a window, it now plays this stupid piano until I've opened all these windows.
All right, chaps. 116 is the level on Bitcoin.
Well, this is getting dark though. It's getting bad. There's a possible bounce here.
114, sub 114.
Vulnerability that is for the economy going forward.
114.
Consumer spending has been very, very strong for the last.
115,995. No, I mean I'm calling a bottom tonight, bro, for sure. And I'm calling it up
at 114.
No, I'm calling. Whatever it is, I'm calling the bottom tonight because there's no reason for this market. There's a good report. There is the Fed basically hasn't told us anything we don't know. There's nothing here. I'm telling you, tonight is the bottom. There's
I
no
agree.
reason.
It can be temporary bottom. Can be temporary.
There's no reason, bro. There's no
it's not
reason.
the bottom forever, but I'd say this is a short-term bounce zone we're getting to here. Well,
Oh no, forever. I don't know. Forever's a long time, bro.
A short-term little.
I would like to see a flush. I would like to see a flush down to like 114 and then a bounce, temporary bounce.
I also like to.
Like 2%, bro. We're nearly there, actually. Yeah. It's 1.5% to go. I mean, that's not too bad. If
Easy.
Can hold
But that will be enough. That will be enough. Like, my level for the ultimate pullback is down 3.6 trillion on the total market cap, which is probably like down at 112. That's what I'm ultimately looking at.
They're selling these alts now, bro. Fuck, you know, look at Solana.
I'm switching to your charts. I need to see what you're watching. Switch to your charts. Switch to your charts. I need to see what you're watching.
Jesus, that's funny. Every time you hear that, it's not
Dracula. Damn, I would be like jumping off the
Soul
chair.
fucking going straight to zero.
I mean, that seemed like
fucking zone, bro.
Was that a trade you took?
Dude, I've added here on Sol, right here, bro. Right here. Fucking added right there, bro.
Bro, it went right through your addition zone. It went right through your addition zone, bro. Like a knife through butter, bro.
That was not good, bro. That, I tell you now, I think I took a stop there. Like, I'm kidding. Come on. BTC must bounce. We must catch this one. Fuck, that was funny. No, it went straight through, bro.
Dude, we should definitely do a degen dungeon here, like a proper degen dungeon where we do 50x, 100x leverage, and then just you can bring it. I hear you have a chicken.
Dude, we got a chicken, bro.
A rooster, it's not a chicken, it's a rooster.
He's good. He's good. He made me $100 the other day.
And how much did he lose overall?
No, I finished.
Bro, how much is a rooster? Maybe we just need to buy a rooster.
Yeah, well, they're quite fun. I mean, they're quite fun. I mean, he's
in the new office. You can make just a case for it or something, like
Hold
space for it.
Hold on a second. Hold on. I'm phoning Sheldon quickly. Hold on a second.
The thing must bounce here. Come.
Yeah, hold on. I'm phoning Sheldon quickly. Hold on a second. Bro, you won't believe what happened to Dylan. He got liquidated again.
Y me llama el cocinero. Crisita, ¿qué? Ve por la paellera. Venga, que las 2 de la tarde ya están aquí. Miren, bañador. La chancla. Todo despeinado porque no me dio tiempo nada ponerme la chancla.
I'm telling Dylan got liquidated.
We don't see a screen.
We can't see a screen. We can't see it.
Y la encontré porque estaba la paellera agarrada entre mis dientes, las piedras de chipiona del paro. Y cuando entro en el restaurante me ve el cocinero con una paellera y a la vez de paellera. ¡Ándale, mira dónde llega el agua! ¡Llegaba el agua hasta el restaurante! ¡Había subido la marea!
Oh my God.
¡Hay que hacerlo!
We're gonna have a go again, though.
And then we have new positions. New positions.
¡Ay, llama para Sevilla! ¡Llama a Sevilla que traigo un país!
Jesus, that's so fucking funny.
Oh my God. Show us another trade. Saul's not good for us.
We're getting about.
And to that's yes.
Show us.
What else bro, we've hit the bottom. Forget it. Move on.
They'll issue some kind of a thing in the next day or so. So
holy shit, my butt is
that's
full.
That's the story, and I would say
I'll tell you what's happening. We're gonna get a bounce here because people think it's
all around
important,
the
and
table,
Asia will
good
flush the whole
arguments,
thing.
and it's a situation.
Guys, I've got 4 more spaces left on my bot, then it's full. I don't know. Fefe, have you been playing these bots?
Not these. I have one AI one, but I haven't.
So listen,
look at this
bot.
I've been playing with the great bots.
I've created a whole lot of bots. I created 𝗫𝗫𝗪𝗫 bot. He accumulates Bitcoin. Then I've got Joseph Lubing, because he's lubing. Okay, now this Joseph Lubing, he accumulates ETH. He is up in 7 days, 10% on ETH. 7 days, 10%. If you want to follow him, there's no more spaces. There's stuck 3 more spaces left. 190. Let's just see, 196. There's 4 more spaces left if you want to join. If you want to join him, you have to use, I'll show you, you have to use this link over here to sign up. Here, the Crypto Man Run one. And then you follow this Joseph Looping bot, but it won't let you follow. There's only 4 spaces left. So 4 of you may actually get lucky. And while I'm here, I better tell you that if you sign up for BTCC, which is one of the good exchanges that actually works with us, right? Okay, now, guys, I don't know if you guys have seen this, right? But you sign up to this exchange. It's an amazing, amazing, amazing exchange. It's got all the futures that you want, all the coins that you want. Okay, here's the catch. It's no KYC. Whatever you deposit, they give you a 10% bonus. So if you deposit $5,000, you get $500. If you deposit $10,000, you get $1,000. If you deposit $90,000, you get $9,000. And you can trade the futures. It's crazy. It's the best deposit bonus I've ever seen. You want to do it? Link below, guys. Link below. Anyway, guys, I don't know. I think this FOMC meeting is done. I think we should just look at the charts. Dylan, I think just take us to charts, bro.
Just take 100x leverage deal.
Just to go fucking long, yeah.
I also think time to go long, bro. I also think time to go long.
Nah.
We got to get back on the horse, yeah.
That bought 4 more spaces. I can't believe it. That's crazy. Like it opened yesterday or 2 days ago. There's a bounce on Bitcoin. I'm just letting you know in case you're not following. Well, okay, it's not a bounce. It's 116. 116 on Bitcoin.
I'm up 140% of my INJ short that I opened on the show.
Come on, bro.
That's it, bro. I'm chill. I'm chill, bro. I'm chill. I'm even gonna reduce my stop loss down here at like 14 on INJ.
Okay.
I'm just gonna sit it out, bro.
Okay, here's Fefe coming. We gotta get it. Fucking
well, okay, Dylan, share your screen. Share your screen. Hold on. Share your screen.
Take 100x. Take 100x.
Take 100x.
Come on, 100x leverage long. Deal. Do it for the team. Take one for the team.
That candle's fucking terrifying.
I don't know why you're trading 3-minute charts. The way I said it, Bitcoin was at 117,500 this morning. It's now at 116. It's 1% down.
Yes,
let's everyone calm down.
Bitcoin's been chilled today. It's the altcoins that got wrecked, really. That dominance.
You know what looks very good? You know what looks very, very good? Doge. Doge looks super cool.
Yeah. Okay, guys, listen. I need to go. I've got an interview now with David Lin. You know David Lin from the David Lin Report. I've got an interview with him now. So
nice.
Yeah, so I've got to leave you guys. But before I leave you guys, I see there's 3,000 people here. Do you think that those 3,000 people are all already subscribed to 100x Club? Guys, if you're not, I'm telling you, it's going to be the next big thing. This channel is going to be the next big thing. Subscribe now. Obliterate the subscribe button. Obliterate the like button. Fefe will bring you a report about the crypto report.
Tomorrow morning, first thing.
Yeah, so basically, I'll tell you what Fefe is
going
to do.
Turn the bell notification on. Turn the bell notification on.
He's going to, what Fefe is going to do, do you see 11 subscribers in one shot? Did you see that? 11 subscribers in one shot. So Fefe is going to put the report into ChatGPT because he's not going to read it because he's fucking lazy. And then he's going to get ChatGPT to summarize it. And then tomorrow he's going to read out the ChatGPT summary and he's going to seem really, really, really fucking smart, right?
I will print it like this on a piece of paper and I will read up the paper.
Yeah. All right, guys. Much love. Love you guys madly. I'm glad I could spend this very boring FOMC, and I'm glad we could all watch Dylan getting wrecked.
I'm long here, bro. We gotta catch this bound.
Hold on. Somebody said, "What a legend! He nailed it."
We're gonna come back strong here.
Hold on. There's a thing that says this. My thesis for FOMC has played out. The QRA showed up, no change in issuance to bonds. FOMC showed 2 dissenting votes, but Powell struck the same tone as previous conferences and cited inflation risk, holding them back from committing the rate cut. Expectations for rate cut in September have been paired, making it 50-50. The lack of dovish drivers this week will disappoint. Who was this? Who was this? His name is Geo Chen. Geo Chen. Very good. Very, very, very good. Unbelievable. All right, chaps. I'll see you guys.
Apply as a researcher. Apply as a researcher.
Where's the application? Where's the link?
I don't know. I'm just saying. I'm gonna take a 50x long here for deal. I'm gonna do it.
Right.
I'm gonna take a 50x long
on what? 50x long on what?
Go Pepe.
Doge.
I'm calling a bottom. Remember, I'm calling a bottom. I'm calling a bottom. 116,500. Like this area is my bottom. That's it.
You can buy hype.
Area means what?
Buy hype here right now. Buy hype.
Okay, guys, I gotta go. Love you guys madly. See you guys again tomorrow. Until then, trade well, my friends.
Take care, ciao.
Dude, this hype's in a good zone, yeah.